Hello and welcome to Business 360. I'm Shireen Bhan. The big stories that we're tracking for you this evening. Record dividend bonanza for the Indian government. The Reserve Bank of India has approved a dividend of close to 2,11,000 crores for FY24. This is 140% more than the FY23 payout. The central bank has also increased the contingency buffer to 6.5% of its balance sheet. The Sensex and the Nifty end with marginal gains after a volatile session. Bank stocks decline, but mid-cap index posts a record close. SEBI moves to safeguard share price-dependent corporate deals and transactions from rumor-driven price fluctuations. The new guidelines propose applying the concept of unaffected price on select transactions, provided deal rumors are confirmed within 24 hours. Regulations to apply to top 100 listed entities from the 1st of June. Paytm's Q4 loss widens to 550 crore rupees. The winding up of the payment bank leads to an impairment of 227 crores. Warns of more losses in Q1 of this fiscal, expects to recover starting Q2. Paytm also signals more job cuts, plans to save up to 500 crores in employee cost. OYO withdraws its IPO papers as it plans a private fundraising drive. Sources say it's looking to raise up to $90 million from family offices. The money will go towards paying off debt to achieve profitability. Norway, Ireland and Spain decide to formally recognize Palestine as a state next week. Despite Israel's warnings, Israel retaliates by recalling its ambassadors to Ireland and Norway. Over 140 nations have formally recognized Palestine, barring the US, UK, Canada, Australia, among others. North India remains on red alert. The Met predicts severe heatwave conditions until the weekend, as maximum temperatures can reach 47 degrees Celsius in several places in Rajasthan, Punjab, Haryana, Delhi and Western UP. The Bangladesh government says that Awami League lawmaker Anwarul Azim, who was reportedly missing for the past 8 days in Kolkata, had been murdered inside an apartment. The Bangladesh police has arrested 3 people. However, the whereabouts of his body yet to be traced. India's self-regulatory body for advertising finds 39% of the ads in FY24 violated the law. Most violations in the drugs and medicines sector, followed by illegal offshore betting. 21% of the ads scrutinized do not have proper disclosures by influencers. Well, straight to the top story this evening. The RBI has announced a record annual dividend of 2.11 lakh crore rupees for the government. This is more than double of the 87,000 crores it paid last year. The central bank has also raised the contingency risk buffer from 5.5% in FY19 to 6.5% in FY24. Bonanza coming in for the central government. Ritu standing by with more details, and Sapna on the implications for the government's borrowing program as well. But Ritu, to you first. Big one coming in from the RBI.
Well, bonanza it is, Shireen. Massive dividend payout of 2,10,874 crores from the Reserve Bank of India to the central government for FY24, possibly the highest such dividend payout ever, and a 140% increase from what we saw in FY23, where the surplus transfer was 87,416 crore rupees. Now, economists on the street we've been speaking to were expecting a dividend transfer of anywhere between 80,000 to 1 lakh crores, or slightly higher thereabouts, but this figure far surpasses that, coming in at double the expected amount. We're calling a dividend for FY25 because the transfer from RBI is for FY24, but it is going to reflect in the government's accounts only for FY25. Now, this big increase, much higher than expected, is likely on the back of our expected higher interest income that the RBI has booked from foreign securities or its bond holdings. There was an expected sharp rise in interest that RBI earns from its foreign exchange assets. That in turn could be attributed to the rate hikes that we've seen the US Federal Reserve undertake in the last 2 years. We have to, of course, wait for the RBI annual report for more details, but clearly RBI's earnings from forex assets would have been very high to drive this kind of a high surplus transfer. Now, in addition, the Reserve Bank of India has also decided to increase the contingency risk buffer to 6.5% of the balance sheet from 6% in FY23 and about 5.5% we saw during COVID years to support growth and economic activity overall. This is, of course, at the upper limit of RBI's 5.5 to 6.5% range. Now, keep in mind, the government had budgeted 1.02 lakh crores as dividend from RBI and state-owned lenders for FY25, and this is a massive amount coming in that is going to support the government's liquidity surplus and expenditure going forward, although the expenditure itself is only expected to pick up after elections.
Well, yes, you're right in pointing that out. What was budgeted was 1.02 lakh crore rupees, and what has been delivered by way of this dividend bonanza by the Reserve Bank is 2.11 lakh crore rupees. So exactly the point that you were making, Ritu. Let's go across to Sapna now. Sapna, how does this change the picture as far as government's finances are concerned? What will it do to the borrowing program?
Oh, big news as far as the government finances are concerned. You know, the numbers have already been discussed in brief by Ritu, and if you look at the overall intent of the government right now and the action that it has been taking since the opening of this month. So first came the government buyback program, and then there's a massive reduction in the T-bill auction size for the ongoing quarter. All of this indicating towards the fact that the government is actually sitting on a very comfortable cash surplus situation, and they are really they're trying various options to kind of deploy this money fruitfully. So from that perspective, on top of all this, another 2 lakh odd crore worth of funds coming in from the Reserve Bank of India for the current financial year. This is basically indicative of the fact that if the surplus cash balance situation does not correct, it may just be a big possibility that they could go in for a cut in their borrowing program for the current financial year. Now, how and when would that be possible? Obviously, we'll have to wait for the new government to be elected. The full budget will be there, and by then, Finance Ministry will have a clear picture of what its revenues and expenditure is going to be like, what are going to be the new economic priorities, if any, for the government. And from that perspective, a call can be taken at that point in time. Why only in the budget? Why not later towards when the government decides the H2 borrowing calendar? Why not then, and why in the budget? Well, if a cut in case comes in the July budget, in the full budget, then that will play out for the rest of the financial year. If the money is not deployed elsewhere, then it can be deployed in this way, and this will also help government bring down its fiscal deficit for FY25, which has already been pegged lower around 5.1%. It could help them then finally meet the FY26 aim if that remains unchanged in the full budget. So net, it's a big story and very good news for the Finance Ministry, for the central government coffers. We have to wait and watch and see how this really pans out. It may also be possible if there are new priorities being announced, new monies to be spent, then the government will have this comfort, then they may not have to borrow additionally from the market. So far, the trend has been that they're trying to reduce their borrowing overall.
Okay, Sapna, many thanks for joining us. Let's get reactions in. Former Finance Secretary Subhash Chandra Garg with us on the program. Also with us, Dipali Pant, former RBI ED. Mr. Garg, Dipali, many thanks for joining us here on the show. Mr. Garg, let me start by asking you, bonanza coming in from the Reserve Bank for the central government will solve many problems in one go.
See, I had suspected that this would be the RBI's gift to the new government. I wrote a piece last Tuesday anticipating that the dividend would be perhaps in the range of 1.5 lakh crores. That is what I said. Now it looks that the Reserve Bank had booked many profits, a lot of profits from its sitting or unrealized profits in the assets, especially the foreign assets. It might be in the range of about 2 to 3 lakh crores, and that has allowed the RBI to sort of give not only more dividend to the government, but also transfer to its reserves. So, of course, it's a good bonanza to the government, but please look at it in the perspective that the government still is running a very high fiscal deficit of 5.1%. That's much beyond 3%, which is the FPM target, or the law of the land. And therefore, the government may have the option to stick to that kind of borrowing or reduce it. But my suspicion is that the government whichever government it is, whether the same government continues or the new one,
Yeah.
they have a lot of expenditure priorities. Therefore, this big transfer, not anticipated in the accounts, would most likely be used for funding the new expenditures.
I'll come to what could possibly be done with this bonanza that's coming from the RBI, whether it will go towards expenditure or whether we're going to see a cut in government borrowing in the full budget, as Sapna was pointing out. Mr. Garg, in just a second, but let me bring Dipali Pant into the conversation. Dipali, always great to have you. What explains this bonanza from the Reserve Bank? The budget, as Ritu was pointing out, had factored in 1.02 lakh crore rupees. Mr. Garg, in his speech just last week, was optimistic and had factored in 1.5 lakh crores, and this is almost 2.11 lakh crores.
Thank you, Shireen. Always a pleasure to be on your show. Well, Shireen, I have no suspicions. Being a conservative banker, I have only certitudes to offer. The size of the Reserve Bank balance sheet has increased for the year ended March 31st, 2024. The income for the year has increased. The expenditure has been marginal, and the year has ended with an overall surplus, as against the amount spent in the previous year, resulting in an increase, in a significant increase. Shireen, as you know, that the balance sheet of the Reserve Bank plays a very critical role in the functioning of the country's economy, and largely reflects the activities which are carried out in pursuance of its currency issue function, as well as monetary policy and reserve management policies, reserve management objectives. So the key, and these are audited accounts, which are audited as per the sections of the RBI Act. And the key financial results of the Reserve Bank's operations during the year 232-24 are always clearly set out and quite transparent. RBI has done well. On the liability side, the expansion was due to increase in the notes issued, the revaluation accounts and other liabilities, if I can be a little technical here, and the foreign currency assets and gold, including gold deposit, gold held in India, also constituted about 72.31% of the assets of the RBI. I'm giving you rough estimates. And you'll be happy to know that while the Reserve Bank has transferred what amounts to largesse to the government, it is only the government's due which the RBI has rendered to it, and also made a provision which has been transferred to the contingency fund of the RBI. So that in any case, if there is any attack on the currency, if there is any issue which the RBI faces, the RBI is strong enough.
Sure.
The balance sheet is, how shall I put it, absolutely bulletproofed, and there is an independent auditor's report and the income statement for the year with all the schedules and statements of significant accounting policies and supporting notes to account, which will all be available in public domain. So it is just what is the due of the government. So the RBI believes in render into Caesar that which is Caesar's. So that is what it is. And among other things,
bulletproof balance sheet. Yes, Dipali.
Yes, and more than that, Shireen, as you know, we were established under the RBI Act 1934, and I can't resist saying that, if you will permit me, to regulate the issue of banknotes and the keeping of reserves with a view to securing monetary stability in India, and generally to operate the currency and credit system of the country to its advantage. So when we transfer funds to the government, these objectives are automatically improved, and there can be no greater delight for the RBI than to see a strong economy and a country which goes at a fortune pace. And you will agree with me.
Yes. I do agree with you on the objective. Let me bring in Jayesh Mehta of DSP Finance into the conversation as well. Jayesh, how do you see the money markets reacting to this?
So I think market has been quite poised for the overall rally for the FPI index inclusion, but this, of course, definitely gives another flip. So there has been reaction of 2-3 basis points at this juncture immediately. I think as more clarification comes, people will start expecting this year's borrowing to get a little lower. That will also add up to the lowering of yield. So it's all starts together. Even in terms of dividend, if you really look at it, I would say it's more mathematical formula. But all the three stars where RBI normally gets the revenue, which is if you look at with fund, even if you take back of the term envelope calculation, $500 billion, you've got suddenly 5% kind of return on the U.S. or on your international FX reserves. Kind of. I'm not saying full year, but part year it helps you.
Sure.
We were part of the year we were liquidity short. The system was liquidity short. If you remember, last quarter, May, June, July, from May to December, where the repo rates were almost at 675. Therefore, market borrowing from RBI. That's also an income for RBI, and of course, FX. If you look at long time, there was a range between 82, 83, 81.5, 83, and you are doing both buying and selling at that level. So that booking of profit also. So all that put together, and after providing for contingency reserves, that's a dividend bonanza for the government and for the market this year. So I would not say that the fiscal deficit for next year could be different. I'm not saying that will be lower. That will be on the trajectory because it depends on how the macro situation and how the RBI has to manage the liquidity as well as the FX reserves and the global rates.
Yes,
So
that is, of course, what the RBI will need to manage. But let's, go ahead.
For this year, definitely, as it is. The supply and the local demand were matching, and you had additional foreign investors coming in. And apart from that, now you might see a little bit lower supply because I do expect the borrowing to get a little bit lower. Of course, announcement will not come immediately. It may take another 3 to 6 months, maybe by December. The lowering of the announcement, or maybe the post-election budget might have some lowering of the borrowing program. But till that time, the overall supply will get released.
Well, the budget is not very far off, and that brings me back to Subhash Chandra Garg. Mr. Garg, the last time, 2019, we saw the budget being presented on the 5th of July. The expectation is perhaps around the same ballpark. That's going to be the next big trigger as far as the markets and the economy is concerned. Given this bonanza from the Reserve Bank, it certainly makes things a lot more comfortable for the government when it comes to expenditure. And of course, that question that Sapna was also addressing, and we heard there from Dipali as well as Jayesh Mehta, on whether the government is likely to revise lower its borrowing program.
So, Shireen, on a budget of about 5 lakh crores, difference of 1 lakh crores is not that significant if you look in the overall terms. And my suspicion was that when the government budgeted 5.1% of the fiscal deficit for 24-25, it had perhaps under budgeted its envisaged capital expenditure program. It will require much higher amounts going forward. And if the other formation comes to the power, then the demand for rolling out the new direct beneficiary schemes and others would perhaps be much more than this 1 or 1.25 lakh difference in the dividend from the RBI. So it's welcome, but I don't want to raise expectations on further consolidation of the borrowing program or the fiscal deficit. I don't think in the first year of the government for the next 5 years, the government would like to look a little more fiscally prudent, bringing down the fiscal deficit, which is desirable, which must be done. From 3%, as I said, it's a very high and very large distance still from 5.1. I don't know why we have started taking 4.5 as the base fiscal deficit. That's too high. We can debate that, but that's a different issue. So I hold the view that the government would use this additional transfers for expanding of maintaining expenditures rather than sort of containing the borrowing program.
Yes, we will have a new government in place, and we will have a full budget as well. As Mr. Garg is pointing out, priority perhaps will be given to the government announcing new schemes or delivering bigger promises on the back of the existing schemes. So that is where perhaps this surplus could come in handy. But we will have to wait till July to find out more. But for this evening, Mr. Garg, Dipali Pant and Jayesh Mehta, always a pleasure. Appreciate you joining us here on CNBC-TV18 with your perspective and insights on what the RBI bonanza, dividend bonanza, means for the government. We will head into a break here on CNBC-TV18. There's a lot more coming up. Don't go anywhere. We're back in a moment. Big international story today. Norway, Ireland and Spain have decided to formally recognize Palestine as a state next week. Despite Israel's warnings, Israel has retaliated by recalling its ambassadors to Ireland and Norway. Over 140 nations have formally recognized Palestine, barring the US, UK, Canada, Australia, among others.
And if one thing is clear to me, it is that Prime Minister Netanyahu has no peace project for Palestine. Fighting the terrorist group is legitimate and necessary after the events of the 7th of October. But Netanyahu is creating so much pain and so much destruction and so much rancor in Gaza and the rest of Palestine that the viability of the two-state solution is in serious danger.
Israel's offensive in Gaza continues. As per Hamas-run Health Ministry, 35,000 Palestinians have been killed since the conflict broke out in the region on the 7th of October. The fighting in Rafah continues, with the UN suspending food distribution due to the lack of supplies. Israeli forces have also entered the Jabalia refugee camp in northern Gaza. They attacked a hospital and damaged the residential areas nearby with air bombardment. Unlike China, the world is not threatened by India's rise. Its growth is welcomed universally. That's the word in from the president of the Eurasia Group. In an exclusive conversation with CNBC-TV18, Ian Bremer praised India's ideology of wanting to be friends with everybody. Speaking of geopolitical tensions, Bremer said he believes that Israel will continue to fight the Gaza war with huge support from its cabinet and citizens. He also expects the war to hurt US President Joe Biden's prospects in the elections. Take a look.
Outcome looks very likely to be exactly the same government you had going in, with just about the same number of seats and 5 more years of a very popular prime minister driving a lot of economic growth and pretty strong relations with the rest of the world. So, that is a good story. That is an area of stability, and India's rise is not an issue that's giving countries consternation. It's not something when you talk about that everyone says, oh my God, what are we going to do about India becoming more powerful? People generally welcome it, and that is a good thing to hear. In the early days, China's rise was welcomed. Later on, China was seen in a more adversarial way, in a more competitive way, especially because China's political system is authoritarian, China's economic system is state capitalist, and China's ideological narrative is wanting to achieve greatness that was stripped away from it at the hands of colonial powers. None of that's true about India. Israel is going to continue this war on the ground in Gaza. It is overwhelmingly supported by the Israeli government, by the war cabinet, and by the vast majority of the Israeli people. Biden's in a lot of trouble on this issue. The right wing, the Republicans, are saying that Biden is too soft, that he's the guy that is, trying to cut a deal with the Iranians and reduce sanctions. He's the guy that says he's going to suspend some military aid to Israel, while most of his own Democrats are saying that he's whitewashing a genocide.
Let's talk about China and the latest impact of the decision by the Biden administration on the tariff hikes. You believe this is actually going to come back to bite the U.S. and this is a counterproductive move. Why do you say that?
It's not clear how much it's going to bite the Americans. The timing is not so bad. The Chinese understand there's an election cycle, and that if they hit the Americans back, that's going to lead to probably only more escalation, at least from Congress. Also, the Chinese economy is not doing well at all. That's why they have to continue to pump money in to ultra long-term bonds and into buying off real estate. So the Chinese don't want a big fight with the Americans right now. And of course, geopolitically, the Chinese aren't doing so well in Asia.
And you can catch that conversation with Ian Bremer on our show, Global Dialogues, at 5:30 p.m. and 9:30 p.m. right here on CNBC-TV18. With that, it is time for us to wrap up this edition of Business 360. The news will continue right after this break here on CNBC-TV18. Stay right there.